Well, hello again, everyone, and welcome to the Options Mentor. Here as we close the week ending today, Friday, the 11th. And what a week it's been. We've had a lot of movement in the market. We've had a CPI, we've had a PPI, but the market, the SPX, what I'm referring to, is really set up a range here. Hey, let's take a look here on the chart. And you can see, or you will see here, that the SPX is actually been in a range here between 44 and 4,600, probably even more specifically like 4,450 to 4,600. And unless we really, close below 4,450 or above 4,600, I suspect we'll probably stay in that range. Maybe, who knows? It could be, a few weeks, or hey, we could violate it later today or Monday, and there we'd be. But it's so hard to tell anymore. The market is so strange in how it reacts to different news. But oh, and by the way, speaking of news, next Wednesday at 2 Eastern, 1 Central, we will have the FOMC minutes from the July meeting. The market likes to use that a lot of times to see what other board governors may have said or think, or what the votes were like during the meeting. Kind of gives them a little inside look, they think, to maybe make some guesses as to what they'll do next. Of course, they're hoping that they won't raise rates. I don't know where we're at on that myself. That's why I always tell people, just trade the trade. Don't try to predict direction of the market. It's usually a fool's errand, because the thing can do what you don't expect, even in the strangest of circumstances. But that leads us into next week. So let's take a look here at the VIX, because as you know, I like to use the VIX to help me determine what trades to put on. And as you can see here, we do have the VIX in a bit of a trend here, but headed down again. And it's in the lower part of the last year anyway, by a long shot. It's up a little bit here from recent, but still the VIX here currently at 15. That's low VIX, folks, no matter how you slice it. And I don't know, absent some external news, why it will get too blown out from here. Now, surely sooner or later that news will come along, and August can often be very volatile, but we'll have to see, when and if that ever happens. So let's go over here to SPX, and let's look at a trade idea for next week. Oh, and by the way, one of the commenters asked me what we could do about September. If there is a lot of movement, what trades can we do? I have a great trade when you're expecting a lot of movement, and I will go over that probably in the next week or two at one of those videos that I do. And I'll show you what you can do when you expect huge movement out of the market, because obviously we don't want to do things like calendars or even diagonals or butterflies if we're expecting really big movement. What do I mean by really big? I mean the SPX moving 80 or 100 points or more in one direction or another in one day. That's a pretty big move. I got a great trade for that, and I'll be talking about that in upcoming videos. All right, so let's look at an idea for next week. And what I have modeled here is a simple double long diagonal. Now, we've done a lot of those. We haven't done them in a while, but the market does seem to be setting up in a range. It's at low volatility. This is a long Vega trade, so I really do like it here. It gives us so much room before we'd even have to think about doing anything, taking off part of the trade or whatever. And I'd like to get 10 or 15% of what I paid for it and get out. So if we could get filled here, this is Friday afternoon. Now, I would wait till Monday. And in fact, by the time you see this video, you'll have to wait till Monday. But it's always better to wait till Monday for non-directional trades, because they adjust the volatilities on Fridays. So essentially, if I buy this right now, if the market doesn't move a lot on Monday, it'll be the same price or cheaper. But if the market moves a lot, well, then, of course, that could be a problem for this trade and a huge move. So essentially, you'd be taking the weekend risk for free if you put on a trade like this on a Friday. That's why I would wait till Monday. But I like the idea here. Currently, we're trading at 44.65, and I just simply went up about, what is that, about 15 points? No, 25 points, sorry. About 25 points, and I bought a long call. And then I sold a short call 5 points higher. And then I went down about 30 points or so, and I bought the 44.45 put and the sold the 44.35 put. Now you can see two different trades here. You can do this all as one trade, like I have it modeled here, a double diagonal, or you could buy the put and call diagonal separately. There's really not an advantage to one over the other as far as entry. You might get in a little faster with the two-legged spreads than the four-legged, but then again, you could have slippage. So either way is fine. Now, whenever you close one of these, I like to close them all as one diagonal to avoid hopefully some slippage, but you can close them as individual components also. So however you want to do that. But the idea of this trade is set something up so it really gives you range. And if we look here, we're good past 4,400 with this, because we wouldn't even have to think about maybe taking off the top complex to protect ourselves unless we got to like 43.90 or maybe 45.30, take off the bottom. So lots of room here. Let's go ahead and look at what, even by next Wednesday would be the 16th, and you can see $52 is what the market maker expected move is, plus or minus, even by next Wednesday. So not a lot of movement there. And if we went up $50 from here, we're perfectly fine, or down 50, also perfectly fine. And let's look to get 10% on this and then get out of it, 10% of whatever you pay for it. Right now, the mid price is around 1060. You could go for 15 if you want, but I really wouldn't press it any further than that. But I think this trade looks good as far as we got a lot of range with it. We got long Vega, which I think, if anything, I don't look for the market to get a whole lot lower on volatility. Could we get under 14 or under 14? Yeah, I think we get under 14, down by 13, but I think this trade would still be fine. So that's why I like it here. And as I said at the beginning, I will be talking about a trade for big moves here coming up soon on this YouTube channel. I want to ask you again to please tell your friends, trading buddies about this channel if they could all subscribe. And please do like the videos. If you're watching this the first time, I'd appreciate it if you subscribe. We're still really growing a lot here, but I'd like to grow a lot more, of course, and get the message out about how well these trades can work for people to leverage even smaller amounts of money and maybe even try to take out, is the idea, a monthly income from buying and selling option spreads on the SPX. So have a great weekend, folks, and look to do maybe something like this if you understand it and it fits your portfolio and risk tolerance. Maybe do something like this next week. As always, keep up with the comments. I always like to answer those there on this page. So have a good one, and I'll talk to you again next week. Bye-bye.